Let's get to the top picks. The first idea from David is Northland Power, a huge player in wind energy in Europe.
Yeah, so Andy, as you know, we've recommended NextEra over time, which is a large U.S. company based out of Florida, specifically for this. But Northland Power is really interesting because, of course, we know that there is tremendous political support for renewable energy, and with high prices for carbon-based energy, it makes it all the more attractive. Northland Power's customers largely are in Europe, which are seeing exceedingly high power prices, and company's been doing very well. What's interesting is that most of their contracts are below current pricing. They have the ability to reset contract pricing, and we're going to probably hear some commentary about that today. Company's due to report at the end of the day today, and technically just recently took out the March highs. So again, one of those companies that's trading basically up on the year against a tough market. And we think that we're probably going to hear some commentary about potential rising margins as we go forward here. It doesn't look like the power issue in Europe is going to get better anytime soon, and Northland's in a very strong competitive position.
Your next idea, Vertex Pharmaceuticals, VRTX on the NASDAQ. What are they all about, David?
Yeah, so Vertex is from the biotech side of things. So they bioengineered compounds. They have had a very dominant drug for the treatment of cystic fibrosis. If I start just from the top down, the biotech sector, like much of the tech sector, sold off over the last couple of years, and the group made a low earlier than the market did. Vertex has had an exceedingly strong growth profile. This year, the estimate is for there to grow their earnings about 40% on the back of that very strong compound in cystic fibrosis. But they have 4 additional compounds that are in development. And probably the one that's the most exciting is a compound for acute pain. So we all know that the incumbent in the market for acute pain turned out to be very addictive and is off the shelves. So it looks as though Vertex has a good solution, and this could be a very large contributor in the future. So in the meantime, you're buying a business that's given us a great growth rate to begin with. It technically way outperformed the biotech group. And so now you've got both strength in the group, you've got strength in the market itself, you've got great growth built in and good optionality in new compounds. We think Vertex is a great way to participate in biotech.
And finally, Nutrien. Fertilizer prices have come off their record highs. Some crop prices are down. In fact, some grains, as you know, have gone back to their level of before the Russian attack on Ukraine. But you see upside for Nutrien there.
Look, this agricultural sector of all of the commodity space actually held up the best versus all of the other commodities. We know that there are structural shortages in supply for fertilizers. And in fact, you know, it looks as though agriculture prices have turned higher again. So I suppose one of the risks is that seasonality can come into play. This tends to be a little more in focus in the summer, but there's good visibility through up until into next year from a revenue perspective. Again, the stock bottomed nicely and has sharply outperformed since the market bottomed and looks to be very resilient. We think this is a great way to participate in a structurally undersupplied market. And it doesn't look like there's going to be any new supply coming on anytime soon, certainly not from Eastern Europe.
I mean, it's interesting. It just got me curious here. What about the food retailers in Canada? Because if the economy turns down, presumably people who can't afford to go to restaurants, they'll be shopping at the grocers more.
Yeah, look, we're a fan of the grocers. We own Loblaws, and as much as it's unpopular, when there is inflation in food pricing, you know, the food retailers tend to take a little bit of extra price, which protects them from inflation, and they benefit. Their margin is on their revenues, and as their revenues go higher, they benefit. We think that it's a good defensive position. That's a company that we would be interested in owning. We also own Weston's in the food business, but that whole space is one that fits in that defensive side of the barbell, while on the other side, sort of some of the more value-driven, economically sensitive sectors like, industrials and materials would pose a good benefit on the other side. So I think that it's important to have both represented in the portfolio right now, because there's still some uncertainty out there in the economy.